Consumer prices rose 1.2% in the September quarter, an acceleration from the 0.8% increase in the June quarter. And that leaves the annual rate of inflation at 5.4%, lower than the 6% recorded in June, but above most economists' forecasts and increasing the risk of another Reserve Bank interest rate rise at its next meeting next month. Here's our finance reporter, Alicia Barry, with more details. Hi there, Alicia. So where's the price pressure coming from?
Yeah, so this data, the Consumer Price Index, is a basket of goods and it gives us a snapshot of what prices were doing in the 3 months to September. As you say, they are rising faster than in the June quarter, which of course is a concern for the Reserve Bank. The most significant price rises were for automotive fuel, which was up 7.2%, rents and new dwelling purchases by owner-occupiers, as well as electricity, which I'm sure many people watching will understand the pain that has been in those bills. The ABS says that goods inflation, or the price rises for goods, is still up on the year before, but that's not the main concern. Services inflation is. Annual inflation, the ABS says, for services such as vets, restaurant meals and hairdressers remain elevated, and it continues to rise for service categories including rents, as we mentioned, dental services and insurance and financial services. While interestingly, inflation for holiday travel has halved, or more than halved, in the past 2 quarters, so prices are coming down there, but whether anyone has any spare cash to take a holiday now is of course in question. But they are the main categories, and that services number or services component of the number is really what they say sticky. It's just not coming down as fast as the Reserve Bank would like.
So how's the Reserve Bank likely to respond?
Yeah, well, there's a lot in this data. Of course, there's the headline numbers, which you reported that the CPI rose 1.2% in the quarter, keeping the annual rate at 5.4%, down from 6%. So we know that inflation appears to have peaked in the December quarter last year at 8%. The RBA wants inflation down to between 2 to 3% and is hopeful that will happen by the end of 2025. So the question becomes whether this fall in inflation is happening fast enough for it. We heard Michelle Bullock yesterday say that there is a risk that inflation won't come down as fast as the RBA has been predicting. And if that is the case, and they deem that to be the case, it's likely we will see another interest rate increase on Melbourne Cup Day. Now, AMP Deputy Chief Economist Diana Messina responded to these numbers as they were released, and she's been looking at the underlying inflation number, the trimmed mean, which was actually up 1.2%, a little higher than expectations like the other numbers. It strips out volatile items, and the RBA will be looking closely at that. She says it is probably a line ball call on Melbourne Cup Day.
I think that there is a complete 50-50 coin toss as to whether the RBA will hike rates in November, because it is a bit of a grey area. I was thinking if the number was closer to 1.3%, then the Reserve Bank would probably hike. That 1.2% probably does still mean that their inflation projections over the next 2 years are still intact. They are forecasting inflation to only come down from its target band of 2.5% by 2025.